This video is recorded over on Discord in the community. The link's down in the description below. In a very unconventional, kind of laid-back manner, but I was told that the content was very good, so make sure you watch all the way to the end. I explained the whole process of identifying 3 levels, as well as some entry opportunities on the day themselves, looking at the 100 pip box, and how to identify good trading setups. Hope you all enjoy. All right, so like I was saying earlier, I'm going to get back to the basics. I wanted to bring you all in and really identify what you're truly looking for, all right? Because it's very easy to learn all of these different things, and then it all gets wound together into a big pile. And it's like, well, where did all this really come from? What is its origin? And I think understanding the origin of everything will definitely help you all to truly understand what you're looking for. So I'm going to go back and re-explain everything real quick. Way back when, right back in the 30s and the 40s, there were some gentlemen, Edwards and McGee and Schaubacher, and they were like the textbooks, the original textbooks, essentially for technical analysis, right? They didn't come up with, but they put into a textbook style or book format looking for chart patterns and trading chart patterns and things like that. Now they're referring to mainly on higher time frames, daily, weekly, and things like that. But because of the fractal nature of markets, all of those patterns show up on lower time frames as well. 1 minute charts, 5 minute, 15 minute, 1 hour, 4 hour. They all show up on all those time frames. And things like peak formations could be referred to as double bottoms, double tops, triple bottoms, triple tops, things like that. Soon after that, some other people came along, like Wyckoff method and the Elliott wave. And within those systems, or the developments of those systems, there are some similarities. From those, you can see accumulation patterns and 3 levels of rise, and then an accumulation or reaccumulation, and then a dump, right? Essentially the peak formation to peak formation, 3 levels, and then the reversal. And also within that, you talk about Elliott wave. It's pretty much the same exact thing, except both of those systems are very complex. All right, you have to have a very specific sort of pattern. There's like all kinds of different things you have to look for. And in my opinion, that's why it makes it so difficult or nearly impossible to trade, is because you have to look for so many different things, and it's hard to do that consistently. So even within Elliott wave, you would have like wave 1, and then you'd label off the retracement, and it's still sort of kind of like a 3 push pattern, and then follow on waves, and you do the same thing for all the waves. And then coming after that, you have things like Beat the Market Maker, Steve Morrow. And if I'm wrong about this, I think he came along in the 90s or like the early 2000s. And his system is very similar to Elliott wave and Wyckoff, in the sense that in his system, he's looking for chart patterns, repeatable, right? Double bottoms, Batman, half Batmans, things like that, to identify peak formations. And then identifying 3 levels of rise, and then peak formation high, and then you get a retracement. It doesn't have to retrace all the way back down, but you're going to get 3 levels of drop. That's kind of his system. And that can be referred to as, if you're on a higher time frame, 1 hour, 4 hour, you could be looking at weekly templates in that sense. So when we're thinking about in the terms of Stacey Burke talks about this exact same thing: 3 levels of rise, peak formations, looking for setups, high of day, low of day trades, previous day's high, previous day's low, looking for those templates. It's almost exactly the same as Steve Morrow. So looking at this here, this is a weekly template. Think about, maybe we're just coming off of 3 levels of drop. Maybe this is like a Thursday and a Friday, and then on Monday you get a first green day. Maybe this is peak formation low Thursday and Friday, and then you get like a first green day, something like that on Monday. And then Tuesday, Wednesday, midweek reversal, Thursday, Friday, something like that. Like that could be one of the templates, but the template is not always going to be this nice. It doesn't have to start on Monday, stair step its way up, Wednesday, Thursday, and then you get that nice stair step down. That's not going to happen. The day of the week is not really, it's not going to be this perfect every single time, where it starts on Monday and it ends on Friday. But I'm going to show you all how to identify where the peak formations can begin and things like that, so you can get better at identifying those 3 levels of rise, just by looking at price, not even having to use the 100 pip box or anything like that, although the 100 pip box is very useful. Okay, so back to the basics. What are we looking for? This is within the week, but this exact same pattern, if I were to delete this, actually, it's already says it right there, daily. We could be looking at this on a daily basis as well, and we're supposed to be. We're day traders. We're supposed to be looking at this pattern on a daily basis as well. So identifying your Asian box, your Asian session, and looking for stop hunts out of that, especially in like the London session, That happens a lot in the London session. They stop hunt to the low, 25 to 50 pips. That's something that Stacey Burke talks about as well. The average stop hunt outside of a range is 25 to 50 pips. And then looking to take your trade. So maybe we're in an up template for the week. Asian range is formed. They stop hunt outside of that range, and then you can expect 3 levels of rise to end the day in consolidation, something like that. You can also have an Asian range where they create the range and they're trading down into the low, but they don't necessarily stop hunt outside, but then break out, pull back, and you can expect 3 levels of rise. And you can also expect daily templates sometimes like this, where you get the stop hunt outside of that range. They come up in 3 levels. They break back up to the upside of the Asian range and then end the day in consolidation, something like that. That would probably look kind of like a doji candle, maybe on like the daily chart. Let's go and take a look real quick and forgive me because I have to manage both. I'm going to pull up this, which I think in theory should, yep, okay, I can see it on that screen. That's good. Oh, I stopped streaming to y'all. Just kidding. I didn't mean to do that. Which one am I going for? That one. Okay, and that brings us to this Asian range idea, right? So looking at the different templates of the Asian range is formed. London opens up and we get 3 drives outside of the range, okay? And then it pulls back throughout the rest of the day, ends the day in consolidation. That is one style of template. Stop hunt to the low. This is one of those ones where they put in a peak formation at the low of the day. Maybe this week was in an up week template or something like that. And then they've came out of that peak formation, level 1 of rise, level 2 of rise, level 3, gets real choppy, end the day in consolidation, something like that. All right, you could even take short trades based off of this or whatever. Come down, let's take a look at some of the different examples of the Asian range. Peak formation high outside of the range, that's that stop hunt outside, and you can expect 3 levels of drops. So now we've got the basically a range expansion, right? When we think about Stacey Burke and what he talks about, range expansion for the day to the downside, or you can get a stop hunt to the low, and then 3 levels of rise to the upside. And that would be one of those examples as well. This is what it kind of looks like on the chart. When you get a stop hunt outside of that range, and you can see them coming down outside of that in 3 legs, putting in a peak formation down at the low, and then they come back up, basically level 1, level 2, level 3 of rise. This is like kind of level 1. It could be level 1, 2, and 3. So it's kind of hard sometimes to gauge what level you're in, but if you're in level 3, maybe you should stop looking to take a long. You know, in this example, right? I'm in level 3, or I think I'm in level 3. Hey, maybe it's safe to say I should stop looking for the long. You know, or maybe you get up here and you're like, oh, we've already done 3 legs or 4 legs up. What more could I possibly expect out of this? Maybe it's not a high probability setup anymore. All right, so like I said, coming back to the basics, where does all this come from? What is its origin? Wyckoff. Let me get back to, let me share this. Everybody still hear me? Is there still audio? All right, good, because I bumped my mic and it started saying all kinds of crazy things. So I'm just going to reiterate one last time. George Douglas Taylor in the 50s, he came out with a book called the Taylor Trading Technique, 3-Day Cycle. That book is very difficult to read. The 3-day cycle has been around since the 50s. Chart patterns, been around since the 30s, the 40s, and maybe even before then. The idea that the market moves in waves of 3s, 3 pushes, Elliott wave, Wyckoff, and then putting it all together into a really nice tradable system. Steve Morrow, Beat the Market Maker. He's got some fantastic content. And Stacey Burke, his content as well, but it seems like his is very heavily based off of, and I could be completely wrong. So please don't quote me on this and send him a bunch of messages saying, I'm not saying anything bad about anybody. All right. I don't want to ever come across like that. That's not what I'm doing here. But Stacey's content seems very heavily based off of the same ideas. 3 levels of rise, first red, first green days, looking at the weekly templates and finding, you know, where we're up high and where we're down low and looking for those trades. And then he's just got a different systematic approach to how he identifies those trades. So let's go and start doing a bit of back testing. We can go, and I had a little bit prepared over here, but I don't really care. I'm just going to go back, and I've got my weekly separator up here with nothing else up here on the screen. All right, this is a good thing if you want to go back and train your eye to figure out where was the trade? Why did it happen there? And you're going to start to see it all over the place. And you're going to kick yourself because it's like, how have I been doing this for this long and not realize this? It's awesome. All right, large W on this weekly template. All right, so we could adequately say this is probably peak formation at the low of this week. And then they've came out of this consolidation. All right, so this first leg up, the first time they've came out of consolidation or after they've created a larger W would be considered push 1 or level 1. All right. And then they go back into consolidation. So we can do push 1, level 1. And if this gets boring, because I'm just going through and marking off 1, 2s, and 3s, I don't know what to tell you because this is it right here. Push 1, level 1. Push 2, level 2. right? They break up, they go back into consolidation, and then they come up, push 3, level 3. This is a weekly template. This is where the week started, coming off of a peak formation from the previous week. Push 1, push 2, level 3, push 3, back to the high. So what day is this? This is a Thursday. So we're talking about, I'll try and keep it in context of like Stacey and things like that. This would be like the front side of a move. Push 1, level 1, push 2, level 2. If you go back and watch Stacey's older videos, like way older, like back from when I was learning, this is how he referenced some of these weekly templates. Push 1, level 1, push 2, level 2, push 3, level 3. Peak formation high. You can expect peak formation high from this point. You should get a first red day if we want to keep it in the context of Stacey Burke, which we do get right here on this example. Push 3, level 3, first red day, looking for that trade setup on the following day. So from this peak formation that was formed that week, just like we had peak formation low from this week, and we've came up 3 levels over here. Uh-oh, you can't see. Man, it would not be a pips to profit stream without some kind of weird, crazy, have we fixed it? Discord will be the death of me. So from that, you can see the larger M, right? This is a peak, and then it breaks down. So this was like the neckline. That is a peak formation at the high of this week. It breaks down. So this could be maybe leg 1. But let's see, leg 2. And then we get a follow-on leg 3 down, and then we get a peak formation down low. Right. So actually, I think this was the first drive out. So this might actually have been leg 1 here. So this is the peak formation high. This is the candle that completed the pattern. And then we've got leg 1, leg 2, and then a bit of a leg 3 down over here. So this weekly template, you can tell, is going down. Right? And I want to talk to you all about peak formations, and also I'm going to talk about resets as well. In fact, I think this was... I'm wrong. This is like this. So coming off peak formation high, you get 3 legs down, and then you can see the larger W down here. This could have been a reset. All right. From this, they come down and follow on legs, which you can see here. So this is basically level 1 consolidation, push 2, level 2, push 3, level 3, back down to the low. So this never broke the backside or the front side, I guess you could call it, of this move, right? This was the front side, and then we came back down leg 1, leg 2, and leg 3. So what can you expect from there? Well, now we've had multiple weeks of drop. Let's keep it in context of Stacey Burke, because that's what you all are probably very used to seeing. And you get now the peak formation down at the low after 3 levels or 3 legs of drop. Push 1, leg 1, push 1, level 1, push 2, level 2. Goes into push 3, level 3. Goes and gets real choppy, goes back into consolidation, and you should be able to expect some kind of M or W down low. We get kind of this larger W that eventually engulfs back up to the upside, right? So now from this, we are now shifting from backside of a move to maybe now the front side of the move, looking for large dumps to go into consolidation and transition for screen day for a large pump. Again, back to the basics. So once we get, what is this? Is this a, where's the first green day over here? There's a first green day over here. Comes out of consolidation. So we've had the larger W down low, and it comes out of consolidation. Now, what happens when you get 3 legs or 3 levels and then it just keeps going? Does anybody have any idea what you would do? Because there's going to be a point where you need to identify some sort of reset, just like kind of over here, what happened. Push 1, leg 1, push 2, level 2, push 3, level 3, and then we've got 3 legs up over here. So there's going to be some times when the market is doing a larger range expansion. If you just got push 1, 2, and 3, push 1, 2, and 3, and that would just create a trading range, right? If they just kept on doing that up and down. There's going to be a point where they have to do larger range expansions in order to begin a trend, right? They have to do expansion. So this could be a larger range expansion of this range, right? So let's take a look. What happens next? They come out of consolidation, big run up. So this is push 1, level 1, push that big leg up, right? It's very easy to see the stair step. Push 2, level 2, back up to the high, goes back into consolidation, push 3, level 3, and there's a large peak formation in which they dump it back down after those 3 legs up. So let's mark that off. Push 1, level 1, push 2, level 2, push 3, level 3, dumps it back down. This is a weekly template as well. You can imagine this is the opening range. They closed on the outside of the opening range on a Tuesday, trades back up into the high on Thursday. And there's that huge midweek reversal back down that all of us already know and love, right? That's one of the weekly templates that we search for. High of week sells, coming off of a peak formation, 3 levels of rise. But here's the thing. This was level 3, push 3, and it's dumped back down and then continued to go higher, which means that the market could be doing a range expansion. This leg down has created a W and then continued to go higher. So that is a peak formation reset. Now we can continue in the uptrend, and we can expect 3 more levels of rise. This is push 1, level 1. Once again, consolidation. Push 2, level 2, consolidation. Push 3, level 3, gets real choppy. Peak formation high, There's the M. It dumps down in one leg. Uh-oh. Here we go. Dumps it down, leg, leg. So 3 levels of drop coming off of a peak formation high at the high of the week. Push 1, level 1. Push 2, level 2. Push 3, level 3. Here's the thing. If I was doing this in live time, would I be able to do this? Yes, absolutely, because I do it every day. I know that I can. I know that you can. This makes the bigger picture make a lot more sense. Like, where do I actually size into a trade? When does it make sense to look for a reversal? Why am I trying to counter trend something just because I believe it's up high? This is level 1 consolidation, ready to go to level 2. You should be looking for stop hunt, low rise in this consolidation, stop hunt, low rise. And then now we are looking for them to get real choppy. And now I'm looking for 3 levels of drop, and that process will continue. This is a weekly template. Drops back down into the beginning of a week. There's the W, large leg down. This is actually what I talk about in a lot of my videos. Traps 1, 2, 3 to the low. Where's the trap? They're trapping volume down low in the 3rd leg down, level 3. There's the larger W that gets engulfed. Now we can expect 3 levels of rise. Larger W, and then that process repeats again. All right, push 1 and 2 and 3, peak formation reset, and we can continue that trend. All right, so if you have 3 levels of rise and it goes higher without failing, right? In this instance, we had those 3 levels, the peak formation reset. We got 3 more levels up. That means that the market was doing a larger range expansion on a higher time frame. If they would have done the same thing, peak formation reset, and then continued, I look for 3 more levels. But if they start to pull back, I look for 3 levels back down, weekly template. I'm looking for large dumps, result in large pumps. And if I'm in the dump, I still want to be participating in the trend trades along the way. Now, this is the NASDAQ. I don't know how far back I went, and you can literally go back as far as you want. This is back in October of 23. We're up to, was this November of 23? Cool. So let's keep going. Big peak formation down low, fairly large W. That then results in 3 levels of rise. You guessed it. All right. So this is a bit of a more choppy pattern, and that's okay because this might actually be a bit part of a much larger W that I'm just not quite seeing. But coming off this peak formation low, get 3 more levels of rise and a peak formation reset. So this is coming out of consolidation. Leg 1, level 1, push 1, level 1. All right, push 2, level 2, push 3, level 3. This is all within 1 week. All right, so yeah, comes out of consolidation up into level 3, the high of the week, and gives you that peak formation high. There it is. There's the M, and it comes down in 3 legs. Leg 1 and a big 1, 2, 3 back down. So this is a bit of a tougher template. Peak formation reset. How do I know that's a reset? Because I kept going. There's the larger W. So again, they come out of consolidation, larger W, beginning of a week. Push 1, level 1. Push 2, level 2. Push 3, level 3. Dumps it down. Peak formation reset. How do I know it's a reset? Because they kept going. See, how's this? Oh, this week is set up weird. There was Tuesday. That was Monday, Tuesday, Wednesday, Thursday, Friday. And they should start on, oh, it does start on Monday. Where's my weekly separator? Crazy. All right, let's get that up there. Let's make it red so everybody can see. So peak formation high after 3 levels. This is a weekly template. Dumps it back down. You can see this was an inside day, but it's a part of a larger W. Comes out of that consolidation. They engulf a W and they go higher. So how do I know? Well, they keep going higher. That's not supposed to happen, right? So push 1, level 1, push 2, level 2, push 3, level 3. Now we've done 3 iterations essentially of really just identifying this as an uptrending market, right? We've had pullbacks. After 3 levels of rise, we have a pullback, but then we continue the larger uptrend. Push 1, level 1, push 2, level 2, push 3, level 3. We go back into consolidation. Now we can expect maybe a first red day. Oh, look, there's a first red day. Okay, I look for a trade setup on the following day. Peak formation at the high of the week, high of the month, I think. And now we might be starting a down cycle. Now, in these other previous examples, we've had multiple peak formation resets and then continuations of 3 levels of rise. And I think that actually happened 3 times, didn't it? So you get your first red day after 3 levels of rise within this current weekly template coming off of peak formation from last week. Weekly templates. First red day, look for stop hunt rise. Remember the Asian range? I'm looking for 3 levels of drop on the day. Level 1 of drop, level 2 of drop, level 3 of drop in the day in consolidation. And I don't even need to go down to a lower time frame to see that. You can just see it from right here on the 1 hour. And then that's, we've got leg 1 down. They've come out of consolidation. You got leg 1 down, push 1, level 1, push 2, level 2, push 3, level 3, and you can see them ending in a 1, 2, 3 back down to the low. So this was all leg 3. Then it repeats again. So this is coming into the end of a week. There's that break in structure, higher high. This is a first green day. Leg 1 down, leg 2 down, leg 3 down. Then you get a first green day in that 3rd leg. Oh, okay. So I've got 3 legs down and it's essentially a down moving market, but I got a first green day and a larger W. Okay, so maybe I can look for the expansion. I like this one. I only use this one for the 50%. Where did it go? So maybe we're looking at range expansions now of that W. Okay, so now we've come out of consolidation, coming out of level 3, push 1, level 1, goes back into consolidation, push 2, level 2. Right, we probably, sometimes it's going to be a little finicky, all right? So you can kind of see that it peaked and then it made a little slightly higher high, so that might confuse you. That's okay. Push 2, level 2, push 3, level 3, back up to the high. Peak formation, comes down, 1, 2, 3, coming off this peak formation at the high of the week. So this could have been leg 1, maybe leg 2, and then you can kind of see this leg 3 down over here, but it's a little bit more of a tough template. But the real thing is just understanding the weekly templates. Just by doing what I'm doing right here, your odds of success go up. Why? Why do your legs, if I am in leg 1, level 1, do I really want to go short on the next day? This is not a rhetorical question. Do you all think it would be good to go short on this day? Or should I be looking for stop hunt low, push 2, level 2? Do I really want to look for a short on this day, or do I want to look for stop hunt low and then rise? If I'm in level 3, do I really want to go long on that day? Probably not. I'm at the top. Why would I just wait until the template becomes more clear? You get a first green day. We're coming off of level 3. I could draw this 50 different ways, but if I had to, this is a bit of a tougher 3 push pattern, but if I had to, if you forced me, I would say that was leg 1 down, this was leg 2 down, and then there's leg 3 down, push 3, level 3, and then there's the larger W, peak formation at the low of the current week for the continuation. Now we've come out of consolidation and the cycle begins again. They come out of consolidation. This is a pretty large leg up where they didn't really pull back at all. But if I had to guess, I don't really like to guess, but if I had to, push 1, level 1, push 2, level 2, push 3, level 3. It repeats the cycle again, coming off the high of the week. Peak formation high. That was not a first red day. This was a first red day. However, you do get those 3 legs back down. Leg 2, leg 3. And then in leg 3, talking about the 33 trade, leg 1, leg 2, leg 3. Level 3, 3 pushes, 3 levels ending in a 1, 2, 3. Right? So this is level 3, and you get the 3 levels of drop. And then there's the peak formation again, coming out of level 3. Repeats the process again. Comes back up, weekly template, first green day. Coming out of consolidation, this is level 1 of rise. This template's a bit more clear. Good stuff. We got level 1 consolidation. They go up to level 2. Do I really want to be a buyer? Or do I really want to be a seller in this market? Probably not. I want to be a buyer, buying down low, stop hunt low, rise. So level 2 consolidation, and then it comes up, level 3, and it repeats the process again. Level 3 was a bit of an extension. There's the peak formation high, first red day. All right, so you got level 3, peak formation high. This is also ending in a 1, 2, 3, push 1, push 2, push 3. Look at the candles, 1, 2, 3 to the high. There's the engulfment, first red day, following day, peak formation high. Push 1, level 1, push 2, level 2, push 3, level 3, peak formation at the low of the week. There's the W. Repeats the process again, weekly template, dump, consolidation, first green day, push 1, level 1. This template's a bit more clear. Push 2, level 2, push 3, level 3, peak formation, high of the week. Is this helping? Is it becoming a bit more clear? Because I've done nothing with levels. I've done nothing. I haven't said anything about opening range. I have said none of that stuff. But if you understand this, all that other stuff becomes so much easier. Holy cow, it becomes easier. If you just understand this, if you want to go confuse yourself with all those other levels, it's not that it's confusing you. I think that opening range initial balance is fantastic, but this should come first. When we talk about like process of learning things, this should come first. Understanding this, and then look for the signal days, and then look for 3 days of drop, 3 days of breakouts, inside days, things like that. If you understand this, applying the setups that we're used to, first red, first green, all that stuff, oh boy, that becomes easier. Trend trades, so much easier. Hey, we're coming out of a W at the low of last week, and we're in level 1 consolidation. Maybe I should not be looking for a short. Okay, so this, like you just said, this is all just weekly template stuff, right? Push, does it again. Push 1, level 1, push 2, level 2, push 3, level 3, level 3 consolidation, large W. There it goes again. Weekly template. Dump, coming off the peak formation from the high of last week to peak formation at the low of the current week. Can we get the recording of this? I think this has been a very less professional version than I'm used to posting on YouTube. Edit it, we need it. Okay, I'll do that for you all, and then I'll post it on YouTube. Yeah, EM. So like the boot camp, my course, and I am not advertising at all. So if you hear me say this and you're like, oh, he's got a course, I'm gonna go buy it. That is not why I did this session. So please don't hurt my conscience by doing that. If you want to, it's there, but this is something that I explained in the course. The purpose of this session was not to get you all to go buy my stuff at all. I genuinely just see people struggling, and I'm like, man, I've got time. Why would I not dedicate some time to go help people that are struggling. Yeah, well, I explain it in the webinar as well, but in the course, I do go a bit more in detail with this. But very seriously, if you just this alone, this is all you really need. Let's see. Let's go down. Let's start looking at some daily templates. Let's get down to a 15-minute chart, maybe even a 5. Maybe a 5-minute chart. I think a 5 would be a bit easier to look at. Okay, so level 3. I've already gone through and like labeled off the weekly templates, right? So we've got the weekly templates identified. I'm in level 3. Do I want to buy? Probably not. I'm looking for a sell. And it gives it to you. So if I was looking for a sell in the New York session, I didn't get it because the day itself was not set up in my session. And that's where I talk about framing the day, right? So we've got the Asian session over here. Let me see. Can I turn on my... Is this going to screw everything up? Let's get rid of that because I'm not going to confuse you all. There's the Asian range. You can see the 3 legs up. They came out of the Asian range, push 1, push 2, push 3 to the high. Got real choppy in level 3 and reversed. 3 legs in level 3, first red day. Then we come to the next day. Asian range, stop hunt to the high. Down, we've identified, hey, we're down in, was this level 3? I'm still looking to go short. Just kidding. They come out of consolidation. Asian range, stop hunt, low rise. There's that template that we looked at when I showed you all the that Asian range sort of template, right? They came out to the top, they came out to the bottom, they spiked both sides, and then you got the rise, right? Level 1 coming up, level 2, level 3. I'm in level 3. Do I really want to buy? Probably not. Stop hunt high, leg 1 down. Asian range, stop hunt to the high, drop, and it continues in that pattern forever. Level 3, best to just stay away, maybe. Or maybe you look for one of the setups that we look for. I'm in level 3. Maybe I should be looking for 3 levels of rise on the day, and I can use the 100 pip box to help me identify that setup. So I wanted to get back to the basics. So forgive me for getting real technical here for just 1 second. Have identified that I'm coming into level 3 on the day, and we broke, I don't know, maybe the previous day's high. One of the things that Steve Morrow talks about and Stacey talks about is using previous day's levels for trapping volume. The market uses previous day's levels for trapping volume. All right, there's the W, peak formation at the low of the day. At what level? They do a peak formation at 50. So maybe I can get 3 levels of rise and give myself a strike zone. Level 1, level 2, level 3 to give myself a strike zone for maybe where I can get a reversal trade in level 3 from the high of the day after 3 levels of rise on the day. And you can kind of see where I'm going with the thought process, hopefully, with that. We can go back and we can look at other setups as well. So if I'm coming out of level 1 and I'm looking for stop hunt low rise, what do you think I should maybe be looking for on the day? Maybe 3 levels of drop coming off of the high of the current day to go back up. Now, it didn't present in the session. That's okay. It's not always going to do that. Where was the peak formations at? The peak formations were made, I think that's probably right here, right? Peaks above, what is this? 50. Level 1 down, level 2 down. Level 3 down. Might have mismeasured. That's okay. Peak formations at that level. There's the short squeeze pattern. Now, it didn't happen in the session, of course, but it's the same pattern that we're looking for. And there's the larger W to go back up. Stop hunt, low rise. Okay, so now we had level 2 consolidation. We've moved up to level 3. I'm not looking for shorts anymore. I'm going to look for 3 levels of rise. Go back. See if I can go back to... I didn't delete all my annotations, so I should be able to, there we go. So we can come down, we can take a look at this one. Coming out of level 2, or excuse me, coming out of level 1, right? So this is level 1 rise, level 1 consolidation. Asian range, opening range, initial balance for the day. Maybe I should be looking for 3 levels of drop coming out of level 1 to go up to level 2. Let me go back this far to the 1-minute chart. It did. Very nice. Okay. So it looks like there was news on this day that brought the market down super duper low. Scary stuff, right? Do I trade the continuation? You could have. First bounce to the low. Maybe it's okay. Got peak formations up at, was that 50? Peaks at 50. And it's in a somewhat of a large box. So this might have been moving in legs of 50, especially with this news event. So let's measure in legs of 50. From here to here, 50 and 50, giving you a strike zone to look for a new peak formation low, stop hunt low, rise. Then you look at price. Remember, Stacey's always talking about time levels and behavior of price. We get down, 3 levels of drop, ending in a 1, 2, 3. There's the peak formation at the low of the day, and we get all the way back up. Now we're going to level 2. Man, I hope this has helped you all. I know I've only been talking for maybe has it been about an hour? It's been about an hour. Saw a couple of you say that it was useful, it was beneficial. I just hate seeing people struggle. And I could see, like, I remember the feeling before I could see it, before they say once you see it, you can't unsee it. It's the truth. I'm telling you, there's 24 of you in here right now. Learn everything that I just said this first. Blank chart, figure out how to objectively or somewhat objectively identify 3 levels of rise, 3 levels of fall, so you can identify a weekly template. That should be number one. Figure that out first. Once you've got that, identify signal days. That's next. Just figure out how to identify signal days. First red, first green day. Easy stuff. Inside days could be useful as well, because especially for like trend continuations, range expansions, and things like that. If you understand the weekly template, the signal days are so easy. And then once you've applied all that, using things like market structure, like some of those toolbox tools that I keep talking about, market structure, having a process for entry, those you don't have to use mine, you can use your own. Time rotations, the 100 pip box, definitely learn how to use that. And then the rest is all within yourself. Don't be, fear of missing out, getting into stuff just because, reversing your theory just because the market looks a certain way. Go into a session with a plan, objectively look and say, hey, this was third level of drop, push 1, 2, and 3 into the end of a day. There's the W. That's level 1 of rise coming in the next day. Maybe I don't want to short. Maybe I should look for stop hunt low, 3 levels of drop for the continuation of the overall larger weekly template, large dump, consolidation. Don't worry, I will post this on YouTube. I'll go make a thumbnail and some crazy clickbait title for you all. But you already know it's not clickbait. So yeah, exactly. Heartbeat, all of that stuff that we already know and love. Heartbeat patterns, opening range, initial, like all that stuff still applies. Don't get me wrong. But this should be first. So after this explanation for you 25 that are still in here, is anything still confusing you that you wouldn't mind me going over while I'm still here? I'll give it a few more minutes. Stop hunt range. What do you mean? One of the things Steve Morrow talks, so Steve's timings are a little bit different. Steve actually talks about using from 8:30 until, I think he said 3. His timings are a little bit different for the Asian range. Like that would be his Asian range, which still works out. Entries. Okay, let's take a look. So this is a good stop hunt low rise template that we just looked at. Let's go back down to a lower time frame. Now, me personally, I use market structure, levels, and things like that in order to objectively be able to enter a market, right? So if I have 3 legs down like this, normally I would like to see a higher high be formed first prior to me entering. Now, sometimes I negate that, or I will remove that piece of my criteria if the pattern and the template is very clear. If I'm getting in at a level, I'll get in at the level. This is my strike zone, like double zeros down to 75, right? That was like my strike zone area. And if I get a pattern like this and I see, hey, they're locking in a level, right? We got peak formations at that level and 3 pushes back down into the low and a consolidation, they've engulfed it. In line with the larger weekly template, I'll just get in. All right, I'll get in at the level. I'll get in at the breakout, whatever. As long as the trade is really clear, right? But however, normally what I'm doing is I would wait until I get a break in structure. So this lower low and then this higher high, I would look to get in low in this consolidation. So lower low, higher high, breaking structure. I look for 3 pushes back down, push 1, push 2, push 3, and a W, and then I can enter in again at levels. They're putting peaks below double zeros, so that allows you to get in at a certain area of the chart using classical charting patterns and things like that. This is a inverse head and shoulders. This is the left shoulder. That's the head. That's the right shoulder. I probably would have got juked out over here trying to go long off that W. Another is positive reaction to 20 EMA. Yep, you can use the EMAs as well. I don't really use the EMA. I just have it on the screen as a visual reference, but I don't really use it to make trading decisions. Steve Morrow, all of Asia range. Yeah, he talks about 8:30 to 3 a.m. I'm pretty sure, but again, that's all just gonna depend on I'm still gonna maintain the same timing windows. I'm not gonna change anything. I'm not gonna change what I've been doing because it works. Yep, don't let every 3 push pattern get you. All right, you're looking. I pull 3 pushes out of the toolbox when it's needed. I'm not looking everywhere on the chart like, oh yeah, that's 3 pushes, time to get in. Like, no, I'm looking at it. I'm looking for a 3 push pattern at certain areas of the chart because of a specific reason. Like, how many times have you got, like, for example, like trying to get into a low hanging fruit and you're like, oh yeah, look at this momentum and stuff. You get in and then this happens to you. It's like, well, why on earth did that happen? Because it's all part of the plan. We're in level 1. Consolidation. We're going up to level 2. You don't want to counter trend. Stacey's even said this in his older videos. Again, when I was learning from him in much older videos, do not counter trend something coming out of level 2. He said that over and over again in a lot of his videos. And I never knew what the heck he was talking about, but I, over time was able to piece it together. You don't want to counter trend something coming out of level 2 because of this. You took this scalp 25 to 50, but you left, gosh, what is this? 100, 200, almost 300 pips on the table to the other direction. I see you all typing, so I'm not going to end just yet, but I'll take a couple more questions or comments or whatever. Yeah, so this is, if I go back to the higher time frame here, hopefully this is a better explanation. So This was coming off of a peak formation at the low of the week. This was a first green day. First green day. This was also an inside day. Get rid of all this stuff. Clicked the wrong thing. That's what I did. You can see this is a first green day inside day, but this is in the third level of drop. First green day, inside day, level 1 of rise coming out of that larger W down low. This is level 1 consolidation. Get everybody to start shorting again so that it can continue in its true trend style of direction. Can I treat signal days, first red, first green day, specifically as potential pivot points? That's what they're supposed to be, Ian. Ian, that's exactly what we're referring to. Like, first red and first green days are meant to be, it's supposed to be you're supposed to get first red and first green days coming out of level 3, right? So we've had 3 levels of drop. That's supposed to be a pivot point, and that's what we're looking for. And that's why when I do my live streams and stuff, and people are like, oh, is that a first red or a first green day? And I'm just like, no, it's not, because we're not at the low or the high of the week, right? Like this, right? Someone would say, hey, if this day closed, let's do like this. Let's go back a bit further. I've had people ask me questions like, if the day closed just like this, like, hey, would that be a first red day? Well, how could it be? Because we're just coming out of level 1 up into level 2. And then, I mean, we're not even at the high of the current week. With the high of the current week's all the way up here. Like, I guess this could have been a first red day right here, because that was coming large pump, first red day. We're in a down moving cycle. Lower lows, lower highs. Like, that would make sense first red day. This would make sense first green day, but this does not make sense first red day because we're in the middle of a range. Good stuff. That's what I love to hear. Reynolds, I've never studied ICT that much, but I got to tell you, pretty much all of his setups, they look exactly like Beat the Market Maker. He just uses fancy words like fair value gap and order block and a bunch of other mumbo jumbo that's very confusing. And I'm not attacking him or saying anything negative about him. He might be a great guy. I have no idea. But what I will say is that I've seen references that he's made and that other people are trading his style, and I'm like, wow, that looks exactly like Beat the Market Maker's sort of setups, templates. And I'm sure they'll both argue that I came first, and I could care less who invented what. It generally doesn't matter. All I care about is this is how the market moves, and I'm going to try and benefit from it. Same as change of care. Yeah. All right, ladies and gentlemen, I think I'm going to end this here. Sounds like this was useful. I'll try to do more of these in the future if I ever run into, some free time that I can provide the community a little bit of extra value. I will certainly do that. I'm glad that this has helped some of you. A lot of you said that it cleared up a lot of confusion. It's always good to get back to the basics, and sometimes just sitting in front of the chart for hours on end, studying this stuff. Good exercises to do. Just go do exactly what I just did on this stream. Go and do this for like a couple hours on a few different pairs. You can scroll back 1 hour charts, find the peak formation low, find the 3 levels of rise. If it keeps going, find the peak formation reset, find the additional 3 levels, find the first red day, whatever. That can be an exercise that you do for yourself. And you could even save these. Go up here, zoom in, go down to a 1 minute chart or a 2 minute chart or a 3 minute chart, 5 minute chart, whatever, and back test level 3. What did it look like? I've got 3 levels of rise. Was there 3 levels of rise? Yes, there was. I take a trade. Okay. And that could be a really great way for you to practice. All right, ladies and gentlemen, you have a great rest of your day. I will see you. I'm going to do a live stream tomorrow morning on YouTube as well before the session. So you have a good one. Bye-bye.